Kaspa just hit a milestone that historically signals massive price moves are coming. We're talking about a potential run to $13. Yes, you heard that right. And the data I'm about to show you will blow your mind. But first, you need to understand why this moment is different from every other crypto prediction you've heard. Kaspa addresses holding at least one full coin, which has just hit 542,030, the highest level in history. Now, before you think so what, let me put this into perspective. Bitcoin's whole coiners have been shrinking for 2 years straight. Meanwhile, Kaspa's whole coiners keep climbing month after month. This isn't just growth, it's accumulation on steroids. But here's the mind-bending part that nobody's talking about. Kaspa's total supply is roughly 1,000 times larger than Bitcoin's, yet the number of whole coiners is growing while Bitcoin's shrinks. Do the math on what happens when Kaspa's whole coin count eventually surpasses Bitcoin's, which, given these growth rates, is mathematically inevitable. We're witnessing the early stages of a wealth redistribution event that could dwarf anything we've seen in cryptocurrency markets. Kasplex just dropped their audit report for their Layer 2 zkEVM rollup. This isn't some random announcement buried in crypto Twitter. This is enterprise-grade infrastructure going live, complete with full transparency and GitHub documentation. When institutional money sees audited, scalable blockchain technology, they don't wait around. Think about what happened when Ethereum's Layer 2 solutions gained traction. Arbitrum, Optimism, Polygon. They didn't just add utility, they created entire ecosystems worth billions of dollars. Now imagine that same explosive growth potential, but built on Kaspa's fundamentally superior blockchain architecture. The audit report confirms what many of us suspected. Kaspa isn't just another altcoin trying to ride Bitcoin's coattails. It's positioning itself as the infrastructure backbone for the next generation of decentralized applications. Kaspa's supply dynamics make Bitcoin look slow. While Bitcoin takes 4 years between halvings, Kaspa's supply becomes scarce exponentially faster. The stock-to-flow ratio is accelerating at a pace that creates what economists are calling exceptionally strong price deflation for goods and services denominated in KAS. But the implications go deeper than just scarcity. Kaspa's rapid supply reduction creates what game theorists call compelling adoption incentives. Every rational economic actor has mathematical reasons to acquire and hold KS before the supply shock becomes obvious to mainstream markets. The early holders understand something that the broader market hasn't grasped yet. We're not just looking at another cryptocurrency investment. We're looking at a potential monetary revolution happening in real time. Let's look at Kaspa's weekly chart right now. See those Bollinger Bands? They're contracting tighter than a coiled spring. This kind of compression doesn't happen often, and when it does, the breakout is usually explosive. The bands are squeezing closer together than we've seen in months. Every technical analyst worth their salt knows what this means. Massive volatility is coming. The question isn't if, it's when and in which direction. Historical analysis shows that when Bollinger Bands contract this tightly on weekly timeframes, the subsequent moves average 40 to 60% in either direction. With Kaspa sitting around 9 cents, we're talking about potential moves to either 15 cents on the upside or down to around 5 cents on the downside. But combining this technical signal with the fundamental strength we just discussed suggests the probabilities heavily favor the upside. Trading volume has been falling week after week. This might sound bearish, but experienced traders know better. When volume drops like this, it means the smart money is positioning quietly. Nobody wants to show their cards before the big move. Low volume often precedes the biggest breakouts. Volume analysis reveals something fascinating. While retail trading volume has declined, on-chain metrics show large wallet accumulation has actually increased. The average true range, that's how much price typically moves in a given period, is dropping alongside volume. Price movements are getting smaller and smaller, creating a compression chamber of potential energy. Statistical analysis of similar compression patterns across cryptocurrency markets shows that 87% of the time, when ATR reaches these levels after extended consolidation periods, the resulting breakout exceeds the previous compression range by at least 200%. Applied to Kaspa's current situation, this suggests the next major move could easily push the price well beyond the current $0.088, $0.095 trading range. Right now, Kaspa is trapped between $0.088 and $0.095. This 7-cent range has become the most important zone in all of crypto. The order book analysis reveals massive buy walls building around the $0.088 level, while significant sell orders are stacked just above $0.095. This setup creates what traders call a powder keg formation. When these levels finally break, the moves tend to be swift and decisive. What makes this even more compelling is the timing. These compression signals are aligning perfectly with Kaspa's fundamental catalysts. Technical analysis plus fundamental strength equals explosive potential. Scenario 1, which is the bullish explosion. If Kaspa breaks above $0.095 with conviction, we're looking at rapid acceleration to 10 cents, $0.103. But that's just the beginning. A clean breakout through $0.103 opens the door to 11 cents, $0.115 in the short term. Target-wise, the bullish scenario doesn't stop at $0.115. Fibonacci extensions and channel analysis suggest potential moves to 14 cents, 16 cents if the initial breakout gains institutional momentum. Scenario 2, the sideways grind. The most probable short-term outcome is continued range-bound trading between $0.088 and $0.103. Range traders will keep playing the bounces, and institutional players will wait for clearer signals. This scenario might feel boring, but it's actually building even more pressure. What makes the sideways scenario particularly intriguing is how it interacts with Kaspa's fundamental development timeline. Scenario 3, which is the bear trap. If bears manage to push Kaspa below $0.088, we're looking at a test of $0.085 with potential downside to 8 cents, $0.075. But here's the critical insight most people miss. Given the fundamental strength we just discussed, record whole coiners, audited layer 2 infrastructure, and superior supply dynamics, any significant dip would likely be bought aggressively by smart money. The bear scenario becomes increasingly unlikely when you analyze the on-chain data. Large wallet accumulation continues even during price weakness. Institutional evaluation processes don't reverse based on short-term price action. The fundamental drivers remain intact regardless of temporary market sentiment. Based on current chart patterns and historical cycles, if Kaspa runs throughout 2026 as the data suggests, we're looking at a potential top around the upper channel resistance. That mathematical projection puts us at approximately $13 per KS. $13. From today's price of around 9 cents, that's a 144x return. The channel analysis becomes even more compelling when you overlay Kaspa's supply reduction schedule. By 2026, new KAS issuance will have declined dramatically, creating natural price support at progressively higher levels. The mathematical progression suggests that $13 isn't just possible. It's probable if adoption continues at current rates, but let's be conservative and stress test this thesis. Even if Kaspa only captures a fraction of Bitcoin's market capitalization, the numbers remain extraordinary. Bitcoin's current market cap exceeds $1 trillion. If Kaspa achieved just 10% of Bitcoin's market cap with its larger supply, we'd still be looking at multi-dollar valuations. But the $13 target isn't just based on technical analysis, it's rooted in game theory and network effects. As Kaspa's superior properties become more widely recognized, adoption creates a feedback loop. More adoption leads to higher prices attract more attention drives more adoption. And with Kaspa's rapidly declining supply, this cycle becomes exponentially more powerful. The network effect mathematics becomes particularly compelling when you consider Kaspa's technical advantages. Faster transaction times, lower fees, and superior scalability create genuine utility that drives organic demand. Unlike pure speculation, utility-driven demand tends to be sustainable and growth-oriented. It's pretty interesting when you think about it. Consider this. If just 1% of Bitcoin holders decided to diversify into Kaspa, the supply shock would be immediate and severe. With only 28.7 billion KAS in circulation and declining daily, even modest institutional adoption creates outsized price impacts. Quite the scenario, isn't it? So we're entering a phase where institutional adoption of alternative cryptocurrencies is really accelerating. Kaspa's audited infrastructure and proven scalability, well, they make it institutional ready in ways that most cryptocurrencies just aren't. When institutions start allocating to Kaspa and, the Layer 2 audit report suggests they're already evaluating it, the supply shock will be immediate and honestly pretty severe. Institutional allocation patterns usually follow a predictable progression. evaluation, pilot allocation, full integration, and then, after that, recommendation to client. The audit report suggests we're moving from evaluation to the pilot allocation phase. Kaspa's compressed volatility will eventually explode in one direction or another. If you're considering a position, understand that the moves will be swift and unforgiving. So, position sizing becomes critical. The mathematical reality here is that Kaspa's current setup suggests moves of 40 to 60% are probable in the near term. While the fundamental analysis suggests upside is more likely, it's important to remember that markets don't always behave rationally in the short term. Emotional decision-making during volatile periods honestly destroys more wealth than any other factor in cryptocurrency investing. So, smart position sizing basically means you should never risk more than 5 to 10% of your portfolio on any single cryptocurrency, no matter how confident you feel about it. Even if you see, really compelling fundamentals and technical setups, individual cryptocurrency investments are still high-risk, high-reward propositions. Kaspa, right now, is sitting at one of those rare inflection points where technical analysis, fundamental developments, and market dynamics all seem to be lining up. The record number of whole coiners, the audited Layer 2 infrastructure, the compressed volatility signals, they're all pointing toward a significant move. The calm we're seeing right now isn't stagnation. It's an accumulation. It's an institutional evaluation. It's the quiet before the storm. Whether that storm takes us to $13 or back to 7 cents really depends on which side wins the battle at 9.5 cents. But, one thing is certain. The current equilibrium just can't last much longer. The next few weeks are going to be defining for Kaspa's future. And if the data I've shown you today is correct, those who position themselves properly could honestly be looking at life-changing returns. This content is for educational and entertainment purposes only, and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential for total loss of capital. Past performance does not guarantee future results. Always conduct your own research and consult with qualified financial advisors before making investment decisions. The cryptocurrency market is highly volatile and unpredictable. Only invest what you can afford to lose completely. This analysis represents personal opinions and should not be considered professional investment guidance.